We don't usually think about art as an investable asset class, but it may actually prove to be the ultimate inflation and recession hedges. We're going to find out exactly how and why with Nigel Glenday. He is a CFO of Masterworks, one of the world's largest companies that securitizes investable artworks. Nigel, pleasure to host you on the David Lynn Report. Thank you for sponsoring this interview and for being here.
David, thanks for having me.
We were talking offline about your background. You had a banking background before working at Masterworks, so I'm curious to get your thoughts on the corporate finance world and merging that with art. But first, let's talk about art itself. Very few people might know this about me. I actually wanted to be an amateur musician, or a professional musician, rather. I'm an amateur musician right now. My mother told me, no, you're not going to make any money, so she sent me to business school instead. I got my career working in finance, and then now I'm doing this, doing financial media. But my passion is art as a broad theme. It's music in particular. But the question still stands on most people's minds is, how do you make money with art? Music, paintings, it doesn't really matter. In your particular case, it's paintings, and we'll talk about that. But not even from the artist's perspective, outside, standing, just observing in, how can people profit from the artist's success? In other words, how can we invest in the artist's success? Is there a way? I'll let you talk about this.
Yeah, well, paintings have been a source of capital appreciation for centuries. And so one of the great things about Masterworks and our conviction around the asset class is we don't have to build a market out of whole cloth, right? So whether you're looking back over this century and centuries beforehand, art has been a proven store of value, and it's one that an entire commercial market has developed around. So from our standpoint, what gets us so excited about the market is how large it is, how global it is, how an entire global infrastructure is really developed around the market. And the market, of course, has global mind share, and it's on, as you know, it's whether it's on the front pages of the Wall Street Journal or New York Times. We've just had it come through a major selling season in New York. So there's a huge commercial enterprise that's already built up around the art market.
One could argue, I'm just going to push back slightly, one could argue that only the best art, which is to say the most expensive art auctioned at the best auction houses in the world, have appreciated over time. If I go to any random gallery down the street and buy a piece of art, that has a low chance of appreciation, right? Can you comment on that?
You don't have to push back, because you are absolutely right. Not all art appreciates the same way. Not like all asset classes appreciate the same way. What we find is the segment in the art market absolutely matters, and price points within that segment absolutely matter. So at Masterworks, we're very focused on the contemporary art segment. You can think about that as art created after World War II, roughly art created over the last 70 years. That's where you've seen the most significant appreciation over the long term. But equally, and I think to your point, price point really matters. So if you're walking into a gallery and you're getting something that's, these even sound like large numbers, but 100,000, less than 100,000, your return outcomes are going to be absolutely all over the map. What matters is if you're purchasing at price points, and price point can be a proxy for a lot of things in an artist market that are $500,000 and up, you start to see far more attractive risk-adjusted returns, and that's where we focus at Masterworks.
So let's talk about the numbers of the art market. There's varying indices tracking the prices of art overall in various markets. I'll just give you one that's widely followed, which is the Sotheby's May Mosey's All Art Index, which tracks the prices of repeat sales going back to 1950. And over the course of the last 70 years, from 1950 to 2021, the annual compound growth rate, the CAGR, has been 8.5%. It has more or less flatlined in nominal terms over the last 10 years. Are you seeing a slowdown in the auction houses?
No, we're not seeing a significant slowdown here. There are a lot of cross currents that are at play in the art market, especially when you talk about the auction houses. One of the most biggest tailwinds we're seeing now is major single asset or single estate sales that are coming up. So we had the Cy Newhouse sale that just happened. We had the Paul Allen sale. And so obviously estate sales that come up aren't correlated to anything. And so that's continuing to drive a lot of activity and a lot of interest in the art market, really across cycles.
Okay. And going back to my point about art not being attainable for most people, the best art sold at the best auction houses, which is partly what the May Mosey's Index tracks, that's not available to everybody. We're talking about the highest caliber art from the most well-known artists, some selling it for hundreds of thousands, if not millions of dollars. How do we make that niche, that asset class within art, accessible to the masses?
Yeah, what you are describing is exactly the issue that Masterworks solves. So the art market, as large as it's been, $1.5 to $1.7 trillion market, is effectively been individuals and families trading with one another. So a huge amount of capital required among individuals to purchase these assets. So the challenge for us is, how do we make the asset class investable? So what we do at Masterworks is create effectively single stock securities out of individual paintings. So the whole process goes from selecting assets, dropping them into single asset companies that can then sell shares in SEC qualified offerings. That becomes the building block for any type of investor now to add art to their portfolio. On the back end from that, then we're managing a collection, we're reselling art, and we're making secondary markets available.
One counter argument to investing in art by a critic, not just an art critic, but a critic of the asset class overall, would be that art in itself doesn't really have any intrinsic value besides, I think one art critic, I can't remember who, said that the only purpose of art is to decorate your walls. That's an extreme opinion by somebody, but the same argument could be applied to Bitcoin. Or perhaps somebody might even say for gold. The asset doesn't generate a yield or an income. And so what is the value derived from?
Yeah, no, what drives appreciation in the market is supply and demand. And there's no doubt about it. It is a tangible asset. It's one that's also mobile. It's not tied to a specific cash flow. That's actually what gives it such a low correlation profile. But the supply and demand dynamic is really what's at play here. You've got an asset that has relative scarcity, right? If you're talking about an artist that's passed away, that supply is fixed. And on the other side of that, you have a wave of demand that's coming from capital that's accumulating among the ultra high net worth globally, chasing a relatively scarce group of assets. So that's what's created appreciation over time. And it's not even an appreciation pattern that's happened relatively recently. It's one that's been exhibited over centuries now.
I like to point to this graph that I'll show on the screen for the audience. It's on your website. It's called The Average Appreciation in High Inflationary Periods. And you see a bar chart of various asset classes with contemporary art leading the way, beating the S&P 500, emerging markets, gold, which is traditionally viewed as the ultimate inflation hedge, and corporate bonds. 13.5% annual average appreciation during high inflationary periods for contemporary art. I'm curious, let's break this down. Why is it that art performs well during inflationary periods, which is a period that you typically see people cutting back on spending on discretionary items? And who are these people that are driving up demand during inflationary periods?
Look, number one, we're talking about a tangible asset. We're talking about a tangible asset that doesn't have a coupon or a cash flow associated to it that can either be inflated away or be impacted by FX rates one way or another. So number one, you've got a tangible asset. Number two, you've got a tangible asset that is in demand from a segment of the population who are incredibly resilient to GDP or inflation measures over time. So that was what we saw during sort of the 1970s period. That's what we were seeing now during high inflation periods. And it's why you see the highest correlation to gold, and which is still actually relatively low correlation to it, but relative to any other traditional asset.
Could you identify art as a segment as a safe haven play, which is to say that if equities are in distress, investors rush to art to protect their wealth?
Art is certainly a global asset. We see that type of behavior in a variety of different regions where we see macroeconomic uncertainty in certain regions. We see assets try to get dollarized, try to move into safe haven assets. This is why you may see the price of real estate in Singapore starting to go through the roof as you see capital start to move around in those type of regions. Art very much plays in the same dynamic in that respect.
Let's talk about the artworks in the database of of Masterworks, a huge database you have. But just generally speaking, give us a sense of the scale of your database, how many pieces of art you have in your collection, and we'll start from there.
Yeah, so we have nearly 300 pieces in the collection that's growing by dozens a month. So there's a tremendous effort on the part of our acquisitions team to source artwork that's within our investment criteria. Now, in order to come up with that investment criteria, we have to take an incredibly data-driven approach. I was talking a little bit earlier about how hard it is to make some of these really like fundamental investment-oriented decisions around the incumbent art market. At Masterworks, it's precisely where we have to start. So we have to understand, how does art appreciate over time? How does risk-adjusted return appreciate over time? So to do that, we have to build our own repeat sales indices. So we have repeat sales databases that have 80,000 plus objects in there. So we have single sale databases that have 5 million plus objects of all the objects that have sold publicly at auction. But what we're seeing now is anywhere from $100 to $200 million of art being offered to us directly. So there's a huge amount of private data that we have that is really not available to anyone in the market. So our ability to structure and make decisions around that is really a competitive advantage for us.
Okay, well, let's drill a little bit deeper. First of all, how do you price or value the art that you acquire? How do you decide the value you pay to acquire the art? I mean, you've worked in banking before. You started your career as a junior analyst. No doubt you've worked on discounted cash flow models. That doesn't really apply to a non-yielding asset. So again, how do you determine the value?
Sure, your DCF's not going to apply, but your comp table that you certainly did as a junior banker will, and it's a very similar exercise. So whether you're benchmarking valuation for a public company, in one case based on valuation multiples, but you're basing that valuation benchmark based on the characteristics of those companies. So I'm looking at companies that have a similar revenue mix, that have a similar geographic footprint, that have similar characteristics that allow me to compare valuation benchmarks. It's a similar approach in the art market. So real narrative that there's a black box and art valuation is highly subjective. It's very similar to what you're doing with public companies, and it's even more similar to what you're doing with real estate. So houses have specific characteristics, where they are, how old they are, where they sold last, and those comparable transactions will allow you to infer value on art. So that's what we do every day. We do that pricing things we look at. We do that pricing our own collection. So we're looking across assets that are selling at public auction, that any appraiser can look at, but we're increasingly seeing that private data as well, that is less known to the rest of the market, as well as activity we're seeing around our own portfolio.
I understand that Masterworks has a very large research team whose job is solely to look for art to acquire. What is in their criteria?
Yeah, so what they are very focused on is appreciation rate, is risk-adjusted return. They are looking at momentum characteristics in certain artists, but alongside they want to understand artist depth. How global is an artist collector base? What we care about is understanding how commercialized is this artist market already. That gives us a basis for then trying to understand what artist markets do we want to be acquiring, what ones do we want to be monitoring, and what ones do we want to be taking out of the portfolio over time.
So give us some trends in the art market right now. What are the consumers or art collectors looking for right now that perhaps these trends weren't around 20, 30 years ago?
Well, there continues to be a focus on the art market from a financial perspective. I wouldn't say that is necessarily a new trend, but places like Masterworks, I think, are really empowering those type of collectors who are really kind of thirsting for more data, frankly, around these purchases. I mean, it doesn't matter who you are. If you're spending $10 million on a painting, I'm going to tell you, this is a financial investment you're making. I don't care who you are, and you're going to capitalize it on your balance sheet. So you want to be able to understand the characteristics around that. So we're starting to see more and more of that, actually. And Masterworks, in some respects, is the tail wagging the dog in the art market in that respect.
Okay, I'm just looking at your website, a few examples you have under recent offerings. So Banksy, the annual growth of record price has been 66%. You've got an initial offering of $2.2 million. Cause, $1.7 million initial offering price. The annual growth rate of this particular artist, 90%, 89.9%. What makes these artists popular?
Look, these are, you actually picked two street artists that have an incredible amount of pop culture recognition. Banksy certainly over decades and cause even in that respect as well. They're both artists that are not only popular across the art market; they're incredibly popular with the investor community. We're proud to have several offerings from both of them. Cause in particular, what people don't understand is he doesn't actually paint that much, so there is real scarcity value in particular in his market. They're also both global markets, and that's what we love about them, and it's ones that have shown potential for appreciation over sustained periods.
Do you think the scarcity aspect is partly what drives value? So suppose Cause were to be more prolific, the value per artwork would go down?
Absolutely. I mean, just in a very narrow sense, Masterworks is only focused on paintings. We're only focused on unique objects. We don't buy prints. We don't buy multiples. We don't buy things that can be readily copied for exactly that period. If there isn't scarcity value, there's really it's very difficult to have a foundation for future appreciation.
One of the disruptors, if you want to call it that, in the art world has been NFTs over the last 2 years. Certainly, you've looked into this. Has Masterworks integrated NFTs in its product line?
We haven't. We've watched NFTs incredibly closely. Fascinating development across the board. We've had investor interest throughout Masterworks history around NFTs. The challenge we've had, irrespective of whether you feel like this is the medium of the future, and by the way, digital art is not something that was invented with the NFT, but regardless of how you feel that, it's a relatively new medium, and so its potential for appreciation is still unproven. And as that proves out over time, if we see evidence that there is a global investor base there, there is activity, and there can be sustained appreciation, then those are the characteristics that really become more interesting for a Masterworks portfolio.
Okay, let's just go back to how it works for an investor. So if I were an investor and I'm interested in investing in Masterworks, how does it work for me? Do I choose the paintings that I want to be a shareholder of, or do I buy an index of paintings, or do you just select the securities for me? How does that work?
Yeah, today our securities are available on a painting by painting basis for investors. So really what you can think about Masterworks is doing is creating the building block that powers investment for any type of investor. So whether you're an individual or you're a major fund complex that's looking to add art to a dedicated fund or a specialty fund, with which you think art can be additive. So the Masterworks platform, the website platform, is a direct to investor platform that allows investors to select individual offerings for which may meet their risk return tolerance and build their own portfolios.
For me, I don't know anything about art. So I can't tell if one particular artist is going to be more popular than the other, or if one particular asset or security is going to have more appreciation potential. I mean, with a stock, at least I can do some due diligence, but I know nothing about art. So help me out here. What is my selection process?
Yeah, so there are a variety of things that our investors will look at, and all our investors will speak to a financial advisor who will guide them through how to think about art in the context of their portfolio, suitability, and really what are the metrics that they should be evaluating. So historical appreciation rate is obviously incredibly important. For many investors, we guide them to Sharpe ratio is probably even more important. What are those risk-adjusted return metrics? And so really some of our most successful investors have been ones that have been building really sharp forward portfolios. Of course, a great way to do it is just to build beta exposure. So investors are really taking a kind of a dollar weighted average or a fixed dollar investment across a number of pieces and building a kind of beta-like exposure that way.
And overall in the art market itself, do you see a shift in geographies of which areas in the world are the hottest markets to auction art right now?
There are always a number of cross currents at play in the art market. North America, New York continues to be sort of the bedrock. But Europe and Asia are considerable contributors there. Asia has had somewhat of a pullback after sort of zero COVID policies. In China, we're starting to see a bit more of a resurgence in that part of the world, but it's still a market that's at play on a global scale.
Finally, let's talk about art's performances during difficult macroeconomic conditions. Again, the May Mosey's Index, I'm just going to draw on that as an example. I noticed no significant decline in the index values during past recessionary periods. So a bit of a dip in 1980, a bit of a dip in 2008, 2009, but it recovered shortly afterward. Generally speaking, how would you rate the performance of contemporary art as an asset class during recessions?
It's performed incredibly well during recessions. And what you're seeing, David, in those indices is not only sort of valuation of art during that period, but it's driven by the supply of art that's available. So those indices are built on auctions that actually happened. So if you're in 2008 and 2009, guess what? If you've got that prized $30 million Rothko, you're not going to put that up at auction. You're not going to put your crown jewel painting up at auction in a very uncertain environment. So you're going to see quality start to suffer during those periods. So indices naturally you'll see gravitate down because you've got those sort of B and C examples that are coming up at auction. But what you're finding right afterwards is a pretty robust snapback. So you may see lower liquidity. Frankly, that's not something that is unique to the art market in any respect, where you have sort of quality assets aren't necessarily coming to market during volatile periods, but then that recovers very quickly thereafter.
So in a sense, it's sort of a recession-proof asset because you're investing in an asset class that presumably the wealthiest 1% are interested in, and they're less prone to recessionary periods in terms of their discretionary spending. Is that an accurate statement to make?
Yeah, I mean, I think that's one way to put it. The other way I'd think about it is, remember, it's a global asset. So you have recessionary periods that are happening at different paces or at all in different parts of the world. Remember, you can buy your painting in New York, you can fly to Hong Kong, sell it there, sell it in London, you can sell it across currencies. So that creates a natural mitigant to macroeconomic pressures in any one region.
Okay. And finally, we talked a little about NFTs, but generally speaking, the digitization trend, how are you capitalizing on that? How are you capitalizing on the emergence of the metaverse? And presumably people who will live and work in the metaverse would probably want some form of digital art in their collection in the virtual world. Is that something you're looking into?
Look, I love physical art. I sleep well at night because we've got our physical art in long-term storage and managing our investors' portfolios. Of course, we're a technology company. We think about all the different ways that we can be sharing the collection. I think it's a very underappreciated part of Masterworks. We have a huge incentive to share our collection with the world. Guess what? Most art is actually in storage, particularly among ultra high net worth individuals. For us, we care about lending our art to museums, to foundations, and if there are digital channels to be able to do that, metaverse or otherwise, that's very much in keeping with the mission of the company.
What is the liquidity profile of Masterworks securities? If I were to buy a security, could I flip it right away like a stock?
Art is a long-term investment, David. We guide our investors to thinking about liquidity horizons in terms of the resale of the art at 3 to 10 years. Now, but you have two paths to liquidity. You have the resale of the art and then also secondary markets on top of that. So to the extent you are looking to trade interim that period, there are secondary markets that allow you to do that.
Would you ever consider looking at potentially like an ETF of an index of all the arts you have in your collection, which is, which you can instantly trade on an exchange, for example?
Absolutely, David. What's important to understand about Masterworks, we're an asset class centric business. So what that means is we have core conviction in the asset class. And it's our mission then to find the different products and channels that make that asset class investable. So today we do that with single stock form securities that are sold to individuals. We've built an incredible business around that. But whether you're a mutual fund, you're an ETF, you're any type of form factor that wants to power an art portfolio investment, we want to be able to make that happen.
Final question, Nigel. I'll let you go. I know I've been saying that for a while, but you've got a lot of good information. Who is your favorite artist right now and why?
Oh, man, I'm a huge Joseph Albers fan. Actually, he's a Bauhaus a trained artist who taught color theory at Yale for many years, and he had actually his second highest record was at Christie's this past week. Not in the Masterworks portfolio, but always one I'm on the lookout for.
Yeah. All right. Well, thank you for bringing this to our attention. Contemporary art has been getting a lot of flack in media. You see things like a banana taped to a wall at a art gallery, and people are paying a lot of money for it. There's artists who have invisible art on the ground. People are paying a lot of money for it. But certainly, you've got real art in your collection. You don't have any invisible paintings in your collection, do you?
No, not yet. No bananas either.
No bananas. All right. I appreciate your time. Thank you very much.
Thanks, David.
Thank you for watching the David Lind Report. Stay tuned for more, and don't forget to subscribe.